afternoon. Welcome to Policy Watch. Before we start today's discussion, here are the headlines. The Finance Ministry gets going on disinvestment, expects to rake in 12,000 crore through stake sales in various PSUs by December end. The government looks at decontrolling sugar as well. Will take a view on the Rangarajan Committee recommendations during this week. The National Investment Board could be set up in the next 2 to 3 weeks. Finance Ministry officials hint at an early decision. And Barack Hussein Obama gets a second term as US President gets 50% of the popular vote, vows to climb the fiscal cliff. Those were the headlines, and to discuss these developments, we have Subhomoy Bhattacharjee, who is a senior editor with the Indian Express. Welcome to the show. Subhomoy, thanks again for joining us. We'll go straight into our first story. The Finance Ministry is still confident about reaching the disinvestment target of 30,000 crore this fiscal. The latest projections by the Finance Ministry says that it expects to garner around 12,000 crore by December alone. Here's a report. Take a look.
The Finance Ministry is considering a 10% stake offloading in Hindustan Copper Limited by the end of December this year. And that's not the only public sector unit that will be divested. The National Mineral Development Corporation as well as Oil India Limited will also go in for a stake sale by the end of this calendar year. The Department of Disinvestment has already secured cabinet approval for stake sales in 4 companies: Oil, MMTC, HCL and Nalco, which could together fetch about 15,000 crore rupees. 7 months of the fiscal are already over and the government has failed to initiate any disinvestment till now, even though officials at the ministry still believe that the target is achievable. Last month, the government had to defer the public issue of Rashtriya Ispat Nigam Limited as the Steel Ministry felt that the issue price suggested by merchant bankers was less than the book value. The Union Cabinet is also expected to clear the proposal to offload 10% of the government stake in the strategically important Hindustan Aeronautics by the end of this week. Bureau Report, Rajya Sabha TV.
So again, disinvestment hot on the agenda. Even the Finance Secretary, Arun Mayaram, has kept saying that we can get the target to 30,000 crore, we can achieve that target, but all that has been delayed. Even the last two, Nalco and RINL, there were differences for pricing of shares. How can the government and the Finance Ministry still expect to meet the 30,000 crore if all they have at this juncture is 1,000 crore during the past year?
Yeah, they won't definitely reach 30,000 crore. That's never going to happen. For the simple reason that we are now almost into the last quarter. It's just 1.5 months left of the third quarter. And in the last quarter, we'll have the disinvestment. We'll have already now, look at the number of big ticket items that the government will be sucking out from the economy. First of all, the spectrum, right? 12,000 to 21,000 crore.
That's the expected margin.
At least 12,000 crore comes out from the economy, from the companies, and that means they're taking loans from the bank to take out that. Then, when the disinvestment, the OFS comes, right. So companies will again be investing in those. The banks and financial institutions will again be putting out money. And third, during the same time, there are public sector companies which have been given approval to raise 60,000 crore from the market.
Right.
And all this will happen while the third and the fourth tranche of advance tax will also be paid out. And finally, the government has said it is going to borrow 20,000 crore rupee extra. So the amount of money that we are looking at is at least some anywhere in the range of 180 to 2 lakh crore. Obviously, there's not that much of money extra in the system to be able to finance all this.
So, if the government keeps saying that we'll reach that 30,000 crore target, it's just wishful thinking. Given the facts that you just outlined, it is going to be extremely difficult for them, first of all, to meet that 30,000 crore target. Also, another development, because they just named Hindustan Aeronautical Limited HAL as one of the companies that they will go ahead with this investment. This is the 4th defense PSU now that has come up for disinvestment. Do you think that HAL at least can garner the kind of money that the government is looking for, at least because it's an IPO. It's a traditional IPO, initial public offer. Do you think there will be enough excitement in the markets for HAL?
You're right, Athar. I mean, and of course, if I remember right, they said Hindustan Aeronautics, they'll do it next fiscal.
Right.
And they'll have to do it next fiscal because right now its equity base is very limited, just 120 crore. And that's obviously no point going to a market to do anything there. So you'll have to expand its equity base, do a lot of restructuring. Essentially, when you do that, then you'll have to change the composition of the board. So all of those will take time. So HAL is definitely out of this fiscal.
Right.
There'll be the others, of course.
Right.
But for any one of those, whenever they strike the market, like SAIL or NALCO, these are big ones.
Right.
And NALCO itself has a problem. NALCO's numbers and the expectation from the market are not the same. The same problem is there with SAIL. So these three are in a bit of a conundrum. So you can bring in only the other ones.
Right. So the disagreement I'm reading here that over the pricing of the shares, especially with NALCO, since you mentioned NALCO, and also with Rashtriya Ispat Nigam Limited, do you think that there will be some sort of a consensus? How high should the pricing be? Do you think, like you mentioned, the expectation is far more and the structure right now doesn't really match it? So is the demand for a higher pricing of shares really a valid one?
Yeah, I think here the government is caught in a bit of a soup. Technically speaking, they would say, like the steel ministry is saying, that we would want the price to be close to the book value, reflect the book value. Now, if that is going to happen, that is not going to make people come in. These are already listed companies in the market. Their prices right now are far below the book value. Can't be helped. The market is looking at like that, and that is where the shareholders would expect. So you can't bring in an additional tranche expecting that the price would be different. So that is a problem. You want to bring in a price which is not only comparable but also gives a discount. But when you bring that, there is always the scare that somebody somewhere could say that you undersold.
Right.
And if that is an extraneous problem that has come in.
Right.
So these things do make these particular three companies quite a difficult one to sort.
Right. You mentioned just a while before that you had gone to this seminar and a finance ministry official was speaking. What is the sense that you get, Subhomoy, really right now? Because what we're talking about right now is targets being missed right now, and the government desperately needs this money. The government, I don't want to use harsh words like fiscal mess, but we are in a tough spot. What is the sense that you get by talking to senior officials? What is their game plan for all this? If they can't get it through here, what other options are they looking for, or do they have?
Yeah, that's the point. I mean, frankly, when you say it's a fiscal mess, it is a bit of a fiscal mess. And it's not entirely something which Chidambaram's group in here, created.
Right.
In fact, they didn't create it at all. It was something that
he inherited.
Yeah. Now, when they are going ahead with it, some of the things that they would have liked to have done, those are getting stuck, like disinvestment. Some of the disinvestment, if it could have been done earlier on, would have helped. The global economy isn't helping by keeping the market slow.
Right.
But possibly the government, if it had brought a couple of those forward, would have helped.
Right.
Telecom spectrum isn't going to give them, and as I say, all the numbers they are right now, these are not secret numbers. These are there in the public domain. So essentially, yes, there is a huge deficit gap from 5.1 to 6.
Right.
And it's a question of the government saying we'll stick at 5.3. Analysts and others are closer to 6.
6. And what is your opinion? Close to 6?
Yeah, if we can't get, if these given these numbers, 5.8 to 5.9 is a fair enough indication of where the government would end up.
That seems to be the consensus among people I talk to as well, around high 5.8 and 9 and around that
That's
number.
Right.
On that note, Shubham, we'll take a break. We'll come back with our second story after this short break. Don't go anywhere. More on Policy Watch this week on the other side of this break. Welcome back to Policy Watch. Now, the government is considering the Rangarajan Committee report on sugar decontrol and will take a decision on removing some of the curbs on the sector by next month. Last month, the Rangarajan Committee had released a report recommending scrapping of major government controls on the sugar sector and move towards reforms. Rangarajan Committee's report has suggested giving freedom to mills to sell sugar in the open market and having a stable export and import policy. It has recommended removal of obligation on part of the mills to supply 10% of sugar at a cheaper rate to the government to meet the demand in the ration shops. Now, KV Thomas, the Food Minister, recently said that we are looking at the Rangarajan Committee report. I think the decision was supposed to be taken yesterday. I'm not really sure if it has been taken, but perhaps during this week they will take a decision on that. Two major points that that this particular committee and even the sugar owners and the mill owners had stressed on liberalizing the sector in the sense, and also saying that removing the curbs that there are on the sector. Do you think that this is the time to do it, or was that time yesterday? It should have been done last year.
Yeah, that's true. I mean, Rangarajan Committee is not the first committee.
Yeah, it's
there have
not
been two other committees.
There are third committee as well as one more committee.
That's right.
Yeah.
Which had already done it, and their recommendation was more or less similar. So essentially, it's a question of when do you pick up the nerve to run with it. Sugar, technically speaking, the problem is sugar is something which is one of the critical items. And if you want to change the price of sugar, you also affect not only the PDS system, but you also affect the pricing of sugar in the market for a host of items. The entire food processing industry's major component is sugar. So so it feeds into inflation structure and all that. So they would have to take it on that. Of course, the mills would want this particular thing to go through, and I think they have a point.
There are fears of cartelization if reform goes through and liberalization of the sector happens. Do you think those fears are unfounded? Those fears are unfounded?
The basic point is whether the farmers would still continue to get the good price that they are getting, and whether the mill owners then in that case should be forced to sell sugar at the price at which the government is commandeering them. Now, if we agree that the farmers need to get the higher price, then in that case we take care of one sector. Okay, fine, the guys who are producing it, those people are protected. Then in that case, there is no reason to keep on insisting that the issue price of sugar should be kept controlled, and that is where the decision has to be taken.
The point I was reading this, the point that the sugar owners, the mill owners are making is that by this, they would save about 3,000 crore rupees from the abolition of levy sugar mechanism which exists, and that can be utilized for cane payments and adding capacity. That seems like a pretty decent economic argument, doesn't it?
Absolutely. I mean, that's the point. The government has to decide that if the farmers have to get the high price, it can always, I mean, there are lots of ways. It can ensure that the sugar price, the cane price is kept high, or wherever it feels is reasonable. And if that is ensured, then the pricing of the sugar in the market has to be left to the market forces.
Right.
And that's where the point is. You can't have both the elements being controlled and yet ensure a good return to the mill owners. That's simply a no-brainer.
So if the government does decide to decontrol sugar, you think the decision could come before the parliament session, and that perhaps is the only time they can do it?
Yes, it has to be before the parliament session.
And do you think it will happen, going by reports and what KV
There's a question of the packaging of the reforms. If they say, and if they're able to sell and convince and make out that this is essentially not going to hurt the sugarcane growers, they are going to be protected, then they have a much more chance of running with it.
Right.
But if they are trying to say that, try to make it confusing and be on the defensive on both fronts, then obviously nothing will get done.
So basically the packaging is important, as we say, to sweeten the deal, if you could call it. On that note, Subhomoy, we'll take a break. We'll come back with our third story on the other side. Don't go anywhere. Lots more to come on Policy Watch. Stay tuned. Welcome back. You're still watching Policy Watch. US President Barack Obama was re-elected for a second term this week, and while the world seems to be taking a collective sigh of relief, there are niggling worries that the Indian economy will have to deal with following an Obama victory. Concerns, mainly emanating from the IT sector, still has economists in India worried, and the fact that Democratic presidents are traditionally more protectionist than their Republican counterparts is yet another reason to be cautious. President Barack Obama has set a limit of 65,000 H-1B visas for software professionals entering the US, and India only gets about 7% of that. The issue of outsourcing and the line that Barack Obama has taken on it has been labeled as plain election rhetoric, but the fact remains that the implications will be great as Obama will tend, to address unemployment in the US. A second-term president with no fear or need of a re-election will now want to crack down on US investments abroad that takes advantage of lower overseas taxes. First of all, Subhomoy, Obama wins again. Everyone's really happy. People think the world is safe for another 4 years. We don't have a Republican president in the White House. But what does that really mean for India? I mean, lately, Obama's rhetoric on outsourcing and shipping jobs outside the US had become a little tough. Do we have cause to worry? Because he doesn't have to worry about re-election now, and he might just get really, really tough on outsourcing.
Absolutely. And Athar, more than that, he's also the president who was there for the last 4 years. So he carries the memory of what he had asked with the countries that he was engaging with.
Right.
And on India, he was engaging on insurance, the pension reforms, and the retail. Now, so these are the three sectors on which he would like to see more action. And the more he presses down on those issues, the more would India would find it difficult, any government for that matter, would find it difficult to deliver. Because essentially, it's a question of the American investment coming into India. We just talked about the fact that we are getting very investment starved. So we need those money to come in. But if those money have to come in, there has to be the quid pro quo of how we exactly rationalize, work out our financial sector. So this is going to be tough. And as you very succinctly pointed out, this is a president who doesn't need to see what's happening after the 4 years in terms of the voting. So he obviously can get very, very tough.
So there are kneeling worries that India and economists in India and India Inc., so as we call them, have. They did say that the IT sector could be hit directly by it because, first of all, he's limited visas for software engineers, software professionals. A major chunk of our southern states produce those software professionals. And if they have nowhere to go, that could really affect the Bangalore, Cyberabad area.
Yeah, but also, Athar, for the past few years, the H1 visa, H1B visas, that thing is essentially not getting filled. The amount of quota that we have has not been filled for the last 3 years. So essentially, therefore, there's a lot of headroom available. So I wouldn't say that's an immediate worry. And if the American economy isn't actually the place where people would need to go to as the the on-source guys, on-site guys to work out there, then obviously the pressure isn't that acute.
Right.
So IT industry can afford to live with it. What happened is actually in terms of the tax breaks which were being given to American companies for dealing with companies abroad.
Right.
You know what is called the shifting job phenomenon.
Right.
And that is where the trouble would emanate.
Accenture and IBM have more jobs in India than they have in the US, and he could come down on companies like that.
Right.
And that is what has them worried at all. One more important point I noticed during the campaign between Romney and Obama was when it came to China, who of course is our neighbor. Romney accused China of being a currency manipulator and keeping the currency forcefully down, artificially down, and experts believe if he would have become president, Romney would have become president, he would have cracked down harder on China than perhaps Obama might, or Obama can, or Obama wants to. How do you think he's going to play out China? Because China, the US owes China a lot of money still, and if Beijing refuses to, if they keep keeping the currency down, it could be a problem for the US economy. How do you see Obama dealing with Beijing now?
That's right, and especially the fact that China is now going to get a new team. And this new team is obviously going to have to start delivering where they want to. So China definitely has said that we would like to gradually move renminbi from a fixed to a floating rate, but they'll take their time. So that is the major worry, or the major point of discord between USA and China.
Right.
Now, that is not going to happen very soon, and definitely not on Obama's watch.
Because he's not going to stress as much as Romney would have in
That's
that
right.
case.
And in any case, it takes time. But the big thing was China definitely now is, in fact, coming in when Obama had come in first time. And now the world has definitely changed, that China is definitely much more powerful vis-a-vis the US. So US government's ability, even with Romney around, would have been far more limited. The fact that Obama is there definitely makes China much more comfortable. The question is whether India can take advantage of the opportunities that are opening up in its investment and trade relation with USA. And that is the key issue to watch.
And he's got 4 more years now. Do you think, and a lot of people do think so, because he, like we said, he has no fear of re-election now, he will force his economic policies for his domestic audience with far more authority right now. He'd go and concentrate back on the US job sector. Unemployment has been one of his big disappointments. He couldn't really revive employment. But do you think that's going to be his focus in the next 4 years now?
Absolutely. I mean, he has done whatever he needed to do with the rest of the world. He already got the Nobel Prize. He's already dealt with and has made his mark or whatever with the Middle East. There have been changes at the Arab Spring. Lots of people do acknowledge that there was some change in the American position also, which helped. So all of those things have happened. And at the time when he was going out, Libya happened, the backlash started happening. So Obama definitely would have much more to feel for the US economy, the US what's happening within the country.
And on an parting note to Subhomoy, it's very important for India that the US economy does well, because it's not just an indicator, India is a big market for US companies as well. So it's crucial for us that the US economy gets back in shape, and it's crucial for the US economy that the European economy gets in shape. Isn't that all of like a symbiotic relationship, all three?
Yeah, but in the immediate short term, we could have done with a bit of US weakness. You know, some of the funds would have come here, so probably would have been good. That's something that we'll have to work out to see whether the combination of circumstances actually are putting us in a good position. We are going into our election season now. So the risks for Indian economy have slightly hardened.
What about Indian exports then? Is Obama's re-election going to hurt Indian exports as well?
No, I don't think in terms of the goods export they'll be hurt. The software export, I don't think in the immediate short term will be hurt, because they already have been affected, whatever. The point is about the financial flow. What happens? Obama, of course, isn't in a position to immediately deliver on making the US economy stronger. But the point is, essentially, the hardening narrative could be a bit of something that we could have a bit done without.
So we'll have to wait and watch if Obama does change his strategy on India vis-a-vis our economic policies. Thank you so much, Subhomoy, for joining us on Policy Watch this week. Those were our 3 stories on Policy Watch this week. The first story was about the Finance Ministry getting their act together on disinvestment, at least wanting to do so. Arvind Mayaram came out on the record. He is the Finance Secretary. He said that 12,000 crore is what the Finance Ministry will get by the end of December. Now, my guest and I both agree that is going to be a tough ask. If Barack Obama in the US is climbing a fiscal cliff, perhaps the Finance Ministry is looking at a fiscal mountain if they want 12,000 crore through stake sales by the end of December. But we'll have to wait and watch what they do. NALCO is a good bet if they can get it in. Also RINL, not that big, but NALCO and also the HAL, the Defense PSU, will be extremely crucial, and we'll have to see how well they do when they hit the market finally. The second story on Policy Watch this week was sugar decontrol. The government has taken a stand. They will look at the Rangarajan Committee reports during this week, and perhaps the 2 most important recommendations concerning the sugar mechanism and the levy will be, there will be a decision on that perhaps at the end of this week. The Food Minister KV Thomas has indicated that the government is keen on sugar decontrol. Our third story, of course, was Barack Obama going back into the White House with 50% of the popular vote. My guest and I talked about what India could see perhaps in the next 4 years as far as economic policy goes. We do expect Barack Obama and the Obama administration to get a little tough on certain issues. Outsourcing will be a niggling worry for Indian industry. Also, the IT sector might just take a hit because of a Democratic president in the White House again, especially Barack Obama, who's promised his people that he will get tough on outsourcing. Again, on that note, I'll end the show. We'll close the show. I'll once again thank Subhomoy Bhattacharjee for joining us. So that's all we have on Policy Watch this week. Till next time, goodbye.